Hi everyone, today is Tuesday. It's the 17th of January 2011, and this is Brian Shannon from Alphatrends.net. Realtic is the sponsor of this show, the first day of the week, and because today's Tuesday, yesterday was a holiday, I'm going to talk about Realtic here for a moment and let you know that I think if you're a serious trader, you ought to be trading on Realtic. You ought to be using their tools for analysis, not just for technical analysis, but for a lot of fundamental analysis, news, and custom studies and that sort of thing. So check them out at realtic.com. The S&P 500 was up 50 cents today. We did finish below the volume weighted average price of the day, pretty significantly actually. But you know, we're still in a decent uptrend here. The market's getting a little bit shaky, I guess, at this point with the big gap up that kind of filled in here a little bit. But we are still bullishly above that rising 5-day moving average. What we have to consider here is the possibility that, you know, we've just run about 8% from 120 to 130, kind of uninterrupted. Now, if we take a look at that on a shorter term, on this 30-minute time frame, we had this trend line which was broken last week. We got back above it today, and now we're still kind of turning sideways in here. Last week we were looking at well, on Friday we had mentioned that Friday's low will be the key going forward for this week at about 127.70. So we were looking also, of course, at this 128.60ish area, 128.50, let's just call it. So 128.50 is our first level of potential support. That was prior resistance early in the year, and then a little bit of resistance in here recently. So you know, as I was saying Friday, I think that, you know, perhaps this market is going to start to begin to turn sideways a little bit through time and correct. If you look at where we are on this longer term basis, we've had our eye on this this trend line that came off the highs from last year, and we've also had our eye on this horizontal line right at about 130. You know, in this 130 to 131 level. So, you know, this has been, this level 130 to 131 was a prior important level last year where a number of battles were fought. So we again are extended a little bit here over the intermediate term by being up 8% without any real price correction. We've seen again a little bit of a time correction over in this area, but the market's still behaving well, and there's nothing really bearish to look at this unless you bought on the open this morning. There's nothing bearish here. It's just maybe more of a case of we're going to turn a little bit sideways for a little bit and digest the gains. So again, not bearish, but you know, I still always have to keep the guard up high. It's defense that wins the game. And let me silence that telephone there. Let's see. So the NASDAQ, we've got a couple of little relevant trend lines in here. One off the close to the December lows, and then kind of the essence of the trend of the last couple weeks in here. We're still well above that. The NASDAQ was up today, up close to a full percent here. So we were looking at the 57.50 as the important level for this week, and we rallied away from that. So it's further away. Now what we want to see is hopefully that the highs from last week in this 58.30 level do hold as support. Looking at the weekly, or I'm sorry, the longer term daily chart here again, we're right on that trend line that we've had our eye on. So that's something worth noting. It doesn't mean the market's going to get rejected here, or it's going to have to pull back, or doesn't have to do anything. What we need to focus on is what is the pattern here, and we're stair-stepping higher. We've got the pattern of higher highs and higher lows. So ideally, we'd like to see about this 58.30 hold as support. It was, a prior important level here as far as resistance goes. This 58.30-ish area. So if we can hold above there, we're still acting constructive in the NASDAQ, and then below that, we've got a bigger level down at closer to 57.50. But the market continues to behave well despite being what many people are calling, overbought. We've had an uninterrupted rally. There's nothing here that says it cannot continue. The Russell 2000 having a little bit of trouble with the highs from back in mid-October, and of course, just today's high was what was today's high here? Let's take a look. Today's high was 77.27, and if you recall, of course, 77 is an important level here. So when we look at these bigger levels, it's easy to look at it and say, prior support tends to act as resistance. We've seen it act as resistance once. Now here we are once again holding above that 200-day moving average, but doing battle with this bigger level here. So where has it come from? It's come from 67 up to 77 basically. So we've had a 8-9% rally here, and where does it have the potential to go before it's likely to encounter resistance? We're right there. Again, that doesn't mean we should be selling short. Now, tomorrow the market may gap lower, and if you went in short today, you'll get lucky on the open. Or if you view it as not lucky but part of your strategy, that's a legitimate strategy as well. But it's, I think, a little bit more difficult to manage risk when we have a rising 5-day moving average, when we have a rising 10, 20, and 50-day moving average. So, if you're going to make those type of trades, I think that my opinion is it should be done with smaller share size, but those are decisions that everyone has to make for themselves as far as risk management and position sizing and that sort of thing. The bigger level we were looking at here in the Russell this week was a 75.80 level, and I think 75.50 to 75.80. We continue to hold up above this level. We ought to be still giving the intermediate term benefit of the doubt to the buyers here. We've got what is maybe another trend line here of importance, and not all these trend lines are going to look picture perfect the way they do in every technical analysis book. That's not the point. The point is, what is the essence of trend? What's the character of the market? And we gapped up and sold off today. We've been gapping up and kind of holding on to those gains for the most part recently, but you can't call it a turning point or anything else just because we have this level. We have to be aware of that level and respect that it does stand the possibility of a bigger reversal in here. We don't have the signs of it yet, but we have to be alert to that and place our bets accordingly, basically, meaning that same thing with the semiconductors. We've got this 32 level that was a big level last year. We came up to that level last week, and on Thursday closed up near there and backed off of it here the last couple days. That's where we have the declining 200-day moving average, and we look at it and say, well, what other things do we have in here? We have essence of trend. Here's another trend line that seems to be holding for now, but this market experienced a large gain up to this prior important level. It's not showing us that it's really shortable yet, but the semiconductors did get stuck below the 5-day moving average. Now, 5-day moving average is starting to decline a little bit. Excuse me. So if we break below 3150 and hold below that for more than a half hour or so, you have to respect that and say we broke this trend line. We have a lower high right now, and if we have a lower low, well then we run the possibility of a deeper pullback to where down to maybe this and here's this 3150 level. It again takes on further significance from the mid-November highs. But if we break that level, perhaps we're going to head down towards the 20-day moving average. And that's coming up through the 50 down near about this $30.80 level. So keep an eye on these semiconductors. If they break below 31.5 and hold below there, then I think the whole market is going to get a little bit more defensive, and we're going to see at least sideways to at least not at least sideways to maybe even some further selling pressure in the broader market. The financials were down just under 1% today. So this group has been battling the 200-day moving average. It's an obvious level. It's a big level. We've got this trend line in here as well. We've been talking about the possibility of maybe it's going to squeeze up through that 200-day moving average and test these highs from back in October at about 1420. It doesn't seem like it's doing that yet so far, obviously, and we're seeing a little bit of horizontal consolidation in here. When we break it down to the 30-minute time frame, here's a 30-minute time frame. Last week's level is the one that we were going to keep an eye on, which was $13.60. breaking below there, well then we have what's looking like a lower high, or a little bit of sideways choppy action at a declining 200-day moving average, at a longer term trend line as well. This is the type of sell-off that below 1360 we could get a little bit of a quick panicky type move down, maybe even towards $13.20. It doesn't mean this whole rally is going to unfold, but a move down towards 1320 does seem like it would be a reasonable possibility. And we're running into resistance in the same spot, but it's realistically we're not on a downtrend here. Okay, we're in a horizontal level, and it seems likely that it would break that 1360 because we are at this bigger level. But a lot of times the obvious, as what was his name, Joe Granville used to say, the obvious is obviously wrong. Anyways, keep an open mind, tight stops, and play a strong defense. That's what the market always demands of us.